Hi, everyone. My name is Dustin Miles. I'm excited to have Nicholas DiLeone here. We've known each other for a few years. We're both in the DFW area. Super excited to have him. If you want to go ahead and introduce yourself and we can go from there.
Yeah, thanks, Dustin. Yeah, I appreciate it. Yeah, we've known each other for a few years, and I own a property that Dustin used to own, and we're through this third time of trying to sell it. We just went back into contract this week.
Oh,
It's a
geez.
difficult market right now, but yeah, my name's Nick DiLeone. I live in Frisco, Texas. I'm originally from the New York City area. Lived there for most of my life. Lived in California for 4 years. And there are a few things that we like about California, a few things we don't like about California. So we decided to move to Texas about 4 years ago, like a month before COVID hit.
Oh, wow.
And that's when we launched our syndication business.
Hmm. Wow. Okay.
Yeah.
Sounds good. So where do you currently invest, and in what cities are you invested in as a GP?
Yeah. So we look at and target Texas I-35, right?
Mm.
So we don't necessarily touch Houston. Um, and we look at tertiary markets, so like a Waco, Temple, those sorts of markets. But we also look at DFW and kind of skip over Austin and look at also San Antonio.
Oh,
We're a GP in a deal in Waco, 120 unit deal, Fleetwood Square. We also have co-GP interests in deals in Virginia,
hmm.
Tennessee, one in Kentucky, and we also look at deals, RV park deals nationally.
Oh, wow. Okay, got it. So what is your role, or what has your role been as a GP? And then, what do you like to do? I know for me, I've been doing a little bit. So I've gone from wearing all the hats to wearing. I'm still wearing a lot of hats, but wearing fewer hats. Anyways, I know there's would love to hear what your roles have been.
Yeah, so I started out in commercial real estate a while ago. I worked for a big commercial real estate company called Levine Real Estate. So they have
Mm.
$150 billion of assets under management. So that was kind of my W-2 job.
Oh, wow.
My focus there was property operations, property management related things, and then also asset management. So when I was in California, I was an asset manager for Class A office, industrial, retail, multifamily. So that's my background. Um, I had a partner, part of Leon Real Estate Partners. He passed away tragically over the
Mm.
summer, and he was my underwriter. So that was kind of the tag team. I was a capital raiser. He was an asset manager. Within the past 6 months, we have a team of 4 analysts,
Mm.
and I've been training them on how to underwrite, and I've become a better underwriter through that process. But I would say, surprisingly, kind of with my operations background, my favorite part of being a GP is raising capital.
Interesting.
I've been
Okay.
pretty good at it, and it's a lot of fun. And through my connections, my institutional connections, I connected with a really large capital partner in Asia that has $200 billion of assets under management. So we're offering on deals in Texas with that capital partner.
Oh, wow. Okay. Gotcha. That's awesome. Just, kind of curious, I know you run a meetup or help run a meetup in North Dallas, and maybe you have some other activities going on. Is there anything that you feel kind of sets you apart from other folks? Like, as an LP, if you go to conference or two, you're like, hey, I'm starting to recognize, the same people here. People have options of, they can go invest in the stock market, whatever. Just kind of curious if there's anything you feel sets you apart.
Yeah, I think, some of the things I talked about before, the fact that I, come from an institutional background.
Hmm.
So we kind of pitch ourselves as, we have that institutional background. We use institutional metrics to measure ourselves and our performance and bring that conservative mindset when we underwrite deals. But we're still a mom and pop small operator, right? So you kind of get that hands-on experience of dealing with like a small company. So that's one thing. And then the other point is you talked about it. I have three other partners. We run a meetup in DFW. It's the third Thursday of every month at the truck yard. And, we provide value to people, right? We like to give back. It's part of our culture to give back to people. So it's educational and it just provides an opportunity for people to network. So we know some pretty big syndicators in the DFW area that have made a lot of contacts, and a lot of their partnerships have been forged in the meetup, and it's just good to see that happen.
Yeah, that's awesome. Kind of curious is obviously, at least we, since we both own the same deal, we, kind of looking at, maybe some similar stuff and all that in the past. But what do you look for in a deal? And you kind of went over location wise, up and down 35, skipping over Austin, but. Just kind of curious if there's any particular metrics you're looking for in a deal.
Yeah, we underwrote very conservatively through this kind of uptick, right? So
Hmm.
we made sure that we placed fixed rate debt on all our deals. We're a GP in 10 different deals. We all fixed rate debt. So floating rate debt has become a challenge for some operators. So that's kind of one thing we look for: cash flow going in, right? So, you know, we talk about like walking in, does it have, negative leverage, positive leverage? We definitely want cash flow going in. And the RV park deals are really high cash flow, 10%
Mm.
average cash on cash.
Oh wow.
So that's what we look for. So we're probably a little bit more conservative, just kind of based on our background than, trying to hit like a grand slam. We try to hit like, doubles and singles.
Hmm.
And our track records kind of speaks to that. So that's what we look for in the tertiary market. Some of these cities like a Waco, let's say, we have a spreadsheet that looks at population growth over the past 12, 13 years. We want to make sure that we're seeing positive population growth within that city, because some cities are just like maybe have one or two really big employers where if that employer left, you'd have an issue. So
Right.
those are some of the things that we look for.
Awesome. So I get a lot of different questions from LPs and things like that. I'm sure you do too, especially you kind of focus on the capital side. So when LPs are looking at a deal or one of your deals, what should they be asking you about the deal? I know I've had LPs sometimes, on the newer side, they're like, "What should I be asking?" Because we want to be realistic, but we're like, "Hey, we're excited about this deal. We think it's a good opportunity and all that." But what should LPs kind of be asking you on your different deals to make sure it's a good fit for them?
Yeah, I think, we talked about it a little bit, like how people's personal investment views align, right? We're a little bit more
Hmm.
conservative with our deals. We're not going to kind of put out there a deal that's 25% IRR. Generally, even if it is a 25% IRR, because then it just doesn't seem realistic.
Right.
We're always looking for cash flow, right? So we kind of target us right now on a multifamily side, a C class, kind of a 6% cash on cash
Hmm.
on average, through a 5-year hold. And I think we just talked about this in our last meetup. How to vet a deal really starts with vetting the GP, right? And
Yep.
talking to the GP and seeing how well capitalized that GP is. Like if there is an issue with the deal, this kind of gets personal, right? But if there is an issue with the deal, can that GP fund a capital call or partnership loan to that deal before they ask for a limited partner capital call, right? So things like that, because you want to know, like, and trust that operator. And hopefully they're going to do right by their LPs. So you're going to ask around to other LPs that invest with the GP. Are they happy with that particular GP? Ask for their track record, right? So, we presented this at the meetup. I talked about my track record, my team's track record. Um, not just kind of real estate owned, but look, see how those deals are performed, right?
Yeah.
So, in the end, you want to see round trip deals. Maybe there's like a refi, maybe there's a sale. what those returns are. But a good metric to track, and a lot of people don't track this, is NOI growth, right? So how
Mhm.
they've really truly grown NOI through the whole period, because that shows really that they've added value to the property. I know
Yeah.
someone. Yeah, go ahead.
Oh, I was just yeah, I like that quite a bit. I know, because I started in 2012 and frankly, throw in two-tone paint and throw in vinyl flooring and charge $150, which does contribute to the NOI, but during kind of that period, I started whenever I started buying, we were buying at, 9 and 10 caps and then obviously it went from a 9 or 10 down to 6, and then we sold some C-class doors, C-class deals sub 5. So, real easy to make a lot of money when you have that cap rate compression. So yeah, it's really good point.
It's a good metric. So we showed that in our track record, kind of like the average NOI growth. I know someone that works at NACREIF, which is like a big institutional
Mm.
nonprofit that measures performance of institutional grade assets, and asked them kind of anecdotally over the past 3 years, what's the NOI growth been for apartments, and that includes core plus and value add. So it's a mix. So you expect that NOI growth to be a little bit lower, but it's about 9%, right? So that that's kind of like okay within the and I think like 2 or 3 years ago it was like double digits, right?
Right. Yeah.
So it's a blend, but that's kind of just a good metric to say, okay, well, did you grow annually in the past 3 years over 9%? Because the cap rate compression, a lot of people have had the benefit of that.
Yep.
Might have been good operators, might have not been good operators. I looked at a deal a few weeks ago. They were trying to sell it, and in 3 or 4 years, they didn't grow NOI at all. It was flat,
Oh, wow.
and they're
Jeez.
and they're trying to get a price increase from what they bought it from. And if interest rates are higher now, it's actually worth less than what they bought it for, right?
Wow.
So really good metric to look at.
Yeah. No, it's really, really good point. There's obviously, everybody has things they really like about multifamily. And then obviously, you're kind of RV parks as well, and maybe some things that people, maybe not like so much. But kind of curious, it sounds like maybe it's the capital raising side and all that, but curious if there's anything that you're like, man, this is a lot of fun, like, versus, maybe what you did in the past as your W-2. So, yeah, just kind of curious what your thoughts are on that.
Yeah, so I think kind of going back to my roots, operational roots, I love kind of going in and figuring out when you underwrite a deal where you can apply the value add strategy, right?
Yeah.
Because the broker will lay out, excuse me, 3 or 4 things kind of the OM. You can do X, Y, and Z if you expend this much capex, and you realize this much value if you cap that at a certain cap rate. Um, Oftentimes they leave things out, right? So, and I'm sure Dustin, you've seen this before too, because you have a lot of experience. You apply, let's say, CSC is in there as a laundry vendor, and everyone loves CSC, but you ask the question, when is the CSC contract going to run out? Because we love to get them out because a lot of people don't like dealing with them. They take a lot of the revenue away from you. And
Yep.
then what we did at the Fleetwood Square property is you buy your own washing machines and dryers, and you get all that income, right? So
Right.
so what we started doing, when I started to have my analysts do, every OM that we look at and underwrite, we started building a database
Hmm.
of every single value add idea, kind of build that out, figure
Hmm.
out kind of what the cost of that is, right? What value is being added with that particular OM, and there's putting in the matrix. So we have this database to pull from now. So now my analysts coming in right away, they can go to that database and kind of figure out like, okay, this is the list of all the things I can do. It's like a checklist,
Yeah. Yeah.
versus kind of asking me like, what do you think here? What do you hear? Yeah, let's go on Google Maps and see if we could add covered parking. But like, here's kind of an idea of like what this might cost and the value added there.
Yeah, it's kind of like you have a tool chest or toolkit, and you ask your analyst to build a bunch of tools. You put them in there, and then when it's time to look at a deal, you flip open the lid, and okay, this works, this doesn't work, this work. So that's cool. That's a good way of thinking about it. So Awesome. Um, and I don't know the answer to this question, but were you, what did that look like in terms of when you started out? Like, did you get into a coaching program, mentoring program? Like, did you, partner up with some people? What that look like? Kind of, what'd your journey look like to begin with?
Yeah, so that's a good question. I mean, I came in with a little bit of hubris to this.
Mm,
Um, I had an institutional background. I'm like, oh, I could do this myself.
right.
And then I started thinking about it a little bit more, and I'm like, okay, let me tame the ego a little bit. And I joined Jake and Gino program, right?
Oh, cool. Okay.
And those people in that group are awesome, really
Mhm.
down to earth people, really connected with them. And I would say 75 to 80% of my partnerships have been connections through that program. So it's
Oh,
been
wow.
really, really fruitful. In fact, a lot of the partnerships are people that used to work at Jake and Gino,
Hmm.
now kind of are doing their own thing, and I've done deals with them. So I would highly recommend, no matter what your skill level is, to join a mentorship group. You're gonna learn, you're gonna network, you're just gonna grow your platform so much faster. Um, and any mentorship group, that particular one is the one I joined, but it was really, really good.
Yeah, that's awesome. Yeah, I think people are looking at we've kind of we've had people like, hey, should I join a mentoring program? I think there's so many resources now that you don't necessarily need to, but I think that it's kind of like bowling. It's kind of like bumpers, and so it just helps you stay in the lane, not fall in the gutter, and I think it helps accelerate your growth, like you mentioned too. So we've always kind of encouraged people, hey, there's a lot of programs out there. Wouldn't just jump into one maybe necessarily, but I'd probably just check all of them out. And then for you, it sounds like you kind of found people that were similar to you, and birds of a feather flock together. And so it was very easy for you once you got in. You're like, well, I like this guy and I like what he's doing, and you're like, I'll partner up with this guy. And so no, that's awesome. That's really great that you're able to kind of find that tribe. So um kind of curious. I don't know if you're much of a reader or what that, or listen to a bunch of podcasts, but I'm not so good with reading a book, but audiobooks I'm pretty good at, just from running or being in the car. I or on the plane, I just turn them on and then kind of go through. But if you have any favorite podcasts or favorite books, and then really I'm interested if there's a book you've read more than once. Maybe it's because I don't know. Depends on how much of a voracious reader you are. But like, if I've read a book twice, like that means I really, really enjoyed it. And so, yeah, just kind of curious. Yeah, if any favorite books you want to point out.
Yeah, I think the first one is The Go Giver. I don't know if you know
Mm,
that book,
yep.
but really, really, really good book. And it's basically, I have a saying that I say to my boys. I have twin boys; they're 7 years old. When you give, the universe gives, and when you take, the universe takes. Right?
Mm,
And it's just about karma. So, like,
yeah.
our meetup is all about giving back, and eventually, we know it's going to come back to you, kind of in spades. When you just kind of, so we're giving out education, connections, all this stuff. And the Go Giver basically is that concept.
Yep.
Things just come to you through the universe when you give out. So really, really good book. It's on our website. Kind of one of the 6 things we stand for: servant leadership, and we mentioned the book in there. Um, Podcast, really good. I know you're a dad. It's a really good podcast. It's called Front Row Dads.
Hmm.
They're kind of pitching a mastermind of getting dads together to talk about being a dad, being a better dad, being more present. There's one episode in there, Health is Wealth. It's about this functional medicine doctor that she talks about our services. So that's kind of really good podcast.
Awesome.
And then the
Okay.
last, yeah, go ahead.
Oh, I was just gonna say, I think I've heard of that. there's something on maybe it's that, I've seen a few 1 or 2 dad masterminds, so maybe that's it, but that's cool. Yeah.
Yeah,
Sorry, go ahead.
I think they might be based out of Austin. So yeah, it's kind
Oh,
of
okay.
local to us a little bit.
Yeah, yeah.
And then the last one, it's not a book that I've read multiple times, but a specific episode of a podcast.
Hmm,
So it's the Freakonomics podcast, and the name
okay.
is How to Become Great at Just About Anything.
Hmm,
So it's this concept of, if you talk about 10,000 hours, or you need 10,000 hours of something to get
mhm,
really good. It tweaks it a little bit. You need to have deliberate practice. So you need to practice things in such a way that you're constantly stretching yourself so you're growing.
mm,
So there's like a little story in there. This woman who's kind of studying this, she's out of Germany. She's a PhD, and she's like, I just want to get into this to see if this is true. And she's a really bad singer, but she wants to have like a hit song and be a really good singer. And she gets a coach and she practices, and she ends up having like a hit song in Germany.
oh, wow,
And
that's
they,
so cool.
you
Okay.
listen to it at the beginning, and she's horrible.
Mm,
But the concept is, if you do it enough and you stretch and work hard enough, you can do anything. That's why. So I introduce it to all our analysts, because they're coming from a scarcity mindset. Just kind of have them think big, that they can kind of grow into the role.
that's awesome. That's cool. Yeah, I love that. And you've been around, and you have a meetup, and you've have some deals and all that. So what does the vision for your company look like, over the next few years, or maybe if you just want to focus on 2024, what do the next few years look like for you?
Yeah. So we made a pitch last year to grow our investor base outside of friends and family. So
Hmm,
we built this relationship with a small family office here in DFW. We've made a few offers on deals, and I was basically cold calling family offices when this connection was made through me. And this is the go giver kind of universe working. I was literally cold calling family offices, hung up the phone, and this guy, who's part of a family office, reached out to me via email through the meetup, through a connection.
oh, wow.
It was like kind of amazing, God,
Yeah, yeah,
God blessing down, right?
yeah.
So is that effort, plus some of my contacts through the institutions. I connected with this large institutional Asian investor. So really, kind of, I set goals. I don't know if you can see this here, but this is it's flipped around.
Yep.
It's called it says the big ass calendar. So it's Jesse Itzler's planning the whole year out. Those are work things, family things, everything. Um, One of my goals is getting three deals done this year, and a lot of it's contingent upon like my capital partner Mire kind of being in. Um,
Hmm.
and they're capitulating a little bit, but we'll see. So that's part of the goals. I mean, overall, the idea is that grow our business to a certain number. I don't want to put it out there, a pretty big
Yeah.
number. Um, and they have, a vision board, and a miracle morning that kind of talks about all these things, right? To kind of visualize these things and make them happen. But in the short run, it's three multifamily deals. We also have another strategy, like a triple net sale leaseback strategy, and
Hmm,
get three of those deals as well. So it starts with 100 deals underwritten, 50 deals kind of deeply underwritten, 20 LOIs, and three deals executed. That's kind of the,
gotcha.
the
Okay.
goals that we're tracking.
Hey, sounds like yeah. I mean, it's I guess March 1st today, but yeah, you got some time. So, um, just curious, I'm sure a decent, you get this question at least somewhat. We get it a decent amount, so we'll have LPs are like, I really want to be a GP. And they're like, how do I do that? What advice do you have? And so, yeah, I'd love to hear if there's any advice that you have for an aspiring general partner.
So there's one piece of advice. It's honestly self-serving, but I think it's true. Is invest in another GP's deal, right? So you can kind of
Mm,
see what that looks like,
yeah.
and really, you're vetting a GP. You want to see if there's like a connection there, right? because
Yep.
you're a partner with this person. See if the GP is willing to take you under wing a little bit and kind of
Mhm.
teach you the ropes, right? So you're almost like paying to play, right? You're putting 50 or 100K in a deal,
Yep.
and you're kind of working that GP and kind of understand the process. The other quick and dirty way is also paying to play through like a mentorship program, right?
Yep.
Um, so that's kind of another right. And then honestly, going to like your meetup, my meetup, other people's meetups, and just kind of networking with people and just
Mhm.
like-minded people. That's the best way. You got to go to conferences. You got to go to meetups. Get into that growth mindset that I think a lot of syndicators have, right? And it's a lot
Yep.
of giving mentality. That really gets you into it.
That's awesome. Yeah. One thing, because I know you mentioned Go Giver and Bob Berg and all that. So I posted on LinkedIn not too long. I didn't realize Bob Berg was active on LinkedIn. So um, I posted about some books. Someone mentioned Go Giver, and then they were like, Go Giver's great. Bob Berg's awesome. And then Bob Berg then replied under that. He's like, "Oh yeah, appreciate that. Love to, love to connect." And so, anyway, I haven't spoken to him or anything like that, but it was, we, just connected a little bit. I just didn't realize he was active on LinkedIn. So I'm like, "Oh, hey, there you are." So, but, anyways, a little off topic, but
It's wild. Someone else posted about the book, and I said, "Yeah, great book," and he did the same thing. He's like,
yeah,
"Thanks." I was like, "Wow."
yeah. Yeah, good for him. Nice guy. So, look at that. Go giver attitude, huh?
That's
He's
right.
living it. So, how can people kind of reach out to you, get in touch with you? Is there do you have a website, anything that you want to share with folks?
Yeah. So if you want to reach out, yeah, you can check out our website. It's www.leonerepartners.com. You can email me at nick@leonerepartners.com. Or if you want my phone number, you can text me or call me at 214-888-6736.
All right. Well, appreciate it, Nick. Thanks for being on the show, and great seeing you as always, and appreciate it. Have a great day. Thank you.
Thank you.